because they know that we can take them out of the system completely, and they'll be, if they don't need to. Will they exist in 5 years as they look today? I don't know. So so I think there's been that inertia and that distinct dislike of our ecosystem from day one, and certainly over the last 10 years, as you've seen in the US, it's been very politicized and weaponized as a political tool for reasons I don't understand, because I think AI is much more political. But because there was such skepticism, and the traditional finance guys kept pushing that rhetoric. They've pushed it for 10 years because they make money out of friction in systems. This new world of digital finance, we remove the friction. You take out the friction and you don't need the intermediaries. So there's that tug of war between the traditional world and the which used to be, I guess, us in the ecosystem were the outliers. Like we were pretty, pretty out there, most of us back in the early days. If you look at it, I mean, the Bitcoin maximalists and the guys that walk around with their beads and shamans and it was a different world, and no, I don't think anyone took us very seriously. But if you move on now, to 2025. Bitcoin's not going to go away. This ecosystem is only getting stronger by the day. It's been and the institutions, they're still saying they don't like it, but they're the ones that are pouring money into it. And I think governments will start to have reserves of Bitcoin. If I had have said that 5 years ago, I stood up at a Financial Stability Board meeting and I said that governments in the next 10 years would hold Bitcoin in reserve, and people laughed at me. Look where we are.
Yes. So how has things changed when you've been writing for different countries for that many years? How is the response, the way you work with the regulators, how has that evolved, do you see?
Oh, I tell you what. So when I first started to do this in Bermuda in 2018, and my hats have to go off to the Bermudian Premier David Burt, because he was the most forward-thinking leader that I've ever spoken to, and he's a technologist. He has a master's degree in technology from MIT. So when we got into Bermuda, I didn't even have a definition for Bitcoin or Ethereum. I came up, I think, in 2014 in Australia with a bunch of people around digital assets. But digital assets is like, this new asset class. Assets that are born digitally, and they're usually owned by digital natives, the people that are under 50. Not usually the likes of the over 50 women like me and the guys that are writing policy and central bank governors who are not particularly young. So it's that asset class. And so we came up with a digital asset bill, which we whiteboarded. Me and the drafters, who thought I was completely crazy, and I think Joseph Weinberg, who was one of the Bitcoin pioneers, came with me, and we whiteboarded what a law looked like. And to be honest, I look back at that law now, and I am so proud, because it stood the test of time, and we bore out of nothing a piece of law that has now shaped regulation and legal frameworks going forward. So I'm so proud of that. So now that I do it, this stuff is in a template in my head. I mean, I can sit down, revise laws in a country, look where their pain points are, which piece of law is missing which, whether it be from their money laundering laws or their securities law, figure out where they don't fit. I mean, writing these legislations and these regulations to me is now like cookie cutter stuff. I can do it in my sleep, and I do. And I wake up in the mornings and I think about stuff. So what I've done in the past is really good, but it's not what I do now. I look forward. So, this year at Anson, you've helped me on the model law for the Commonwealth on stablecoins. Last year, I was the expert lead on the model law on virtual assets for the Commonwealth. And I did that because I saw that there's 56 countries in the Commonwealth, of one of which my own country is, but they're pretty bad on getting anything done with crypto for the last 10 years, and probably for the next 10 years, to be quite frank. So I looked at the consistency of the common law system across 56 countries, which is a third of the world's population. And I thought, well, if I can't do anything in America or South America or Europe, at least if we could write some law that goes across many of the emerging markets where this stuff is really used. It's like Bitcoin is a day-to-day phenomenon in places like Nigeria and India. Make no mistake, people use it because their banking systems are so fractured.
So let's explain a bit about the common law, because a lot of people have the understanding that the Commonwealth of Nations is still linked back to the UK, and UK has a lot of say. Is it like that now?
No, so it's just the Commonwealth of Nations is effectively the world's largest trade organisation to be effect. The king sits in a state of head of state, but he doesn't have any power. Everybody, there's republics. So India's a part of the Commonwealth. Nigeria is. We have the biggest countries in the world. We're getting more by the day. Apparently Cameroon's now in, and they speak French. So it's the king is just a figurehead. All the countries have equal say, but we are the strongest body of nations in the world with the same law system. And so, if you go into the US, they use civil law. In Europe, they use civil law. In South America, and in places like the US, they have state regulators and federal regulators. It's a mess. But in most Commonwealth countries, you have a securities regulator, a financial intelligence unit, people look after AML, and then you have central banks. And that's pretty standard across the 56 countries of the Commonwealth, which makes up 2.8 billion people. And to be quite frank, I think more than 65% of the Commonwealth's age is under 30. So you think about the people that, digital assets. They're not the baby boomers and the Gen Xers like me. They're the millennials and the Gen Zs and whatever you call them. So, my daughter's a digital native. I call anyone that uses this as their appendage of their body a digital native. And these digital natives use digital assets. And there's many of them. There's billions of them. So, we can't ignore it. And I think governments tried to ignore this movement for way too long. And it's only really been in the last 18 months that we've seen it become a political issue in many countries. And you've seen regulators and central banks start to take the ecosystem seriously, because if you look at who's in our ecosystem, some of the biggest companies in the world are the billion-dollar companies. They far surpass traditional finance, capitalization of even many banks. So it's too big to be ignored now. But it's not about it's not about Bitcoin, Ethereum, whatever cryptocurrencies. It's about the innovation that's come out of that, and we're building now on Web3 with that transactional layer of things like I would call stable coins, where you can't transact in Web3 and in the digital finance ecosystem with fiat currency. What are you going to do? Go and do a
I think it's also, we need to backtrack a bit, because I'm now thinking all the different steps. I asked you why in terms of what is the Commonwealth of Nations? We talked about that. But our next question I want to ask is, why the model law? Why do you think doing that through the Commonwealth will be so important?
So most countries in the Commonwealth are emerging markets, to be quite honest. The majority of the Commonwealth is not Canada or Australia, or even the UK. It's many countries across Africa. It's India, the Pacific Islands, and many of these countries are very under-resourced when it comes to their government frameworks, their attorney general's offices, their finance ministries. They don't have a lot of talent. So it's very difficult for, say, an attorney general that's sitting in Malawi, or the attorney general of Mozambique. He doesn't understand anything about a virtual asset or a digital asset, but under the FATF requirements that all countries need to make provision for virtual asset service providers in their jurisdictions, there is a point where the law becomes very important. So instead of a bunch of financial consultants running into these countries and charging them a fortune and giving them a useless piece of legislation, which I've seen across the world many times, and been paid by some of the larger organisations, policy organisations in the world to do that, is not the right way to do that. So we gave everyone a model, and everybody can use it. It's the same across the entire Commonwealth. And it means that these Attorney General's offices, or the drafters of laws in these countries, have an ability to have a model which they can follow. Yes, they have to tweak it to their own legal systems, but it's a generic model that can be implemented across the 56 countries of the Commonwealth, and is the same across all of them.
So is there a support group at all? Like, for example, we finished the model law. Is there a support group that can support these different countries to help
Yeah.
them implement? So how does it work inside the
So
group?
so the Commonwealth generally reach out, I mean, on that, and don't forget, we all did, there was, I think on the Commonwealth model law, I think there was 20 of us. We all did it pro bono. And you've been on the next alliteration of that, which is the Commonwealth model law of stablecoins. We've all done it pro bono because we wanted to show that countries that can't afford this don't have to pay for it, and they don't have to get exorbitant, consultants and policy writers that really don't understand what they're doing to come in and give them a really bad piece of law. So that was very important for all of us from a perspective of doing this for the right reasons, not to make money. So a lot of the pro bono experts that have worked on the virtual asset model law, which is actually just an umbrella act. So now we can roll out the virtual asset model law on stablecoins because we've already linked it back to virtual asset, the original law. Now we can roll out many laws which could go across the Commonwealth, which is unusual because there's no umbrella laws. Probably MICA might come close in Europe, but I mean, to read MICA, quite frankly, you've got to have a PhD in computer science. So people are leaving
It is
Europe
very
because
complex.
they're very complex and it's overcomplicated. I think this is the issue, and I'm not a lawyer, so I think people take offence sometimes that I help write laws, but I think of things like a banker from a business perspective, from a logical perspective. I think a lot of the times when the lawyers get involved and write these laws, they become very convoluted and very, very, very not user friendly. For companies to comply with, and if companies can't comply, they're going to go. So I think you're seeing a huge flight of companies that were in Europe are leaving Europe. The US, I've spoken to some of the new administration in the US. They've got a couple of bills on stable coins at the moment. That one of them's led by Congressman Tim Scott, who's a really nice guy. But I think there's a lot of lobby groups in the US which are pushing for certain things around stablecoins. So I think our draft law will be out in the next couple of weeks on stablecoins. And I think given where we sit in the ecosystem, stablecoins is the flavour of the moment. It's the topic that everybody's talking about. But I've looked around the world and I've compared many laws, and I don't think any of them are particularly good. So what we did with our model, we got more experts in who did it for free as well, and people that that led the BIS writing papers on stablecoins, and some of the best technologists and cybersecurity guides in the world. And we've got a bunch of really good security lawyers, and we've got a bunch of attorney generals, and I've also got a number of central bank governors and finance ministers that sit in the group. Don't contribute much because we do it all on WhatsApp, but they watch it. So I think this is the first time that I've actually ever seen people, the decision makers like the central bank governors and the finance ministers, actually be willing to learn themselves and not give it off to other people. So we have, I think, 6 or 7 finance ministers that are working with us in this group. We've got a number of really good technologists, including Anson, people that have built stable coins. We've got some of the best cybersecurity guys in blockchain in the world. And this law has come together really quickly. I mean, I think we've managed to do it, Anson, in 4 months?
4 months.
Which is unheard. And we've included things that other jurisdictions have left out, because there's piecemeal pieces of stablecoin law around the world. I think the UAE have got some stuff. There's some stuff out of Singapore. There's something in MICA, but none of them covered what I would say is the full ecosystem for stablecoins, like yield-bearing stablecoins, other really big stablecoins. Whether you like them or you don't like them, people are going to use them. So you're better off to have a piece of regulation in place and just not hope for the best, because I can tell you, after what we saw with Terra Luna, people are going to do this. And if they don't do it inside a system that's regulated, they'll do it outside the system, and you'll never control it.
So now with the stablecoin paper that we're doing right now, the thing is, we're also seeing in the US side, well, at least for now, with as far as I can see in terms of the news, they are only allowing the banks. They wanted to only allow the banks to do it. How different is the paper that what we're trying to do?
So ours actually allows, and I think this is the kicker of why the model on stablecoins is very good, because it feeds off the umbrella law we had on virtual assets. So you think about the US, they don't have an umbrella act they can just put stablecoins into. It comes out of whoever's going to be in control of it, the Federal Reserve. What we did, we said stablecoin issuers don't necessarily need to be financial institutions. They can be virtual asset service providers, because in this whole ecosystem, you need the exchanges. I mean, when you have a stablecoin, you got to cash it in somewhere. You know, you can't, we're going to go to JP Morgan and they're going to cash in their own stablecoin. It doesn't work. So we've included VASPs to be allowed with a proportionate amount of regulation that's prudential and, AML and, consumer investor protection. We've got a tier for VASPs, and we've done it in a tiered approach. We've included algorithmic stable coins, and we've also included yield-bearing stable coins. Now, everybody told me 6 months ago that there was no way that yield-bearing stablecoins were going to happen, and I was stupid. And I was like, no, I promise you, in the next 6 months, someone will issue a yield-bearing stablecoin.
PayPal and who recently, right, just had a yield-bearing stablecoin.
PayPal on Friday.
Yeah.
You get 3.14%. And I've been looking at this for a year, because if you look at the ecosystem, there's a lot of money in our ecosystem. There's so much money. These people generally don't want to go back into the fiat currency system, to be quite honest. But I have stable coins, but the problem with the stable coin is I can have it, but I'm not earning any yield. So I have, when I get paid in stable coins, or I get stable coins, I would generally transfer it into one of my high yield savings accounts, because at least I'm getting 3% from a bank. So I've thought about this for a while, and I thought, well, somebody will build a stable coin that is yield bearing, because that way the ecosystem doesn't need to go and transfer it back into fiat currency. That can stay in the ecosystem of digital finance. So I think that was going to come regardless of whether people liked it or they don't. Algorithmic stablecoins, I really don't like the things. I've traded, I built high frequency trading models in 1999. These things, they have their issues, but they're easily regulated if you go back to first principles. And I think regulators get scared of this technology because it looks new. It's all based on stuff that's happened before. I mean, nothing is new. Yeah, the technology might be a little bit different, but the essence of an algorithmic stablecoin, is probably how we trade algorithmic, other modeling in other asset classes. But they have to be regulated, and so leaving them out and just ignoring them is not a good a good reply. And laws have to be in their totality, but they also need to be able to be updated. So we've allowed virtual asset service providers to issue stable coins. We've had other parties. We have different tier levels, and also what class of stablecoin issue are you going to be. So you'll be under, if you're a financial institution, you'll be under all the prudential requirements that is required. If you're a VASP, that's certainly going to be lower. But we have all those thresholds for VASPs anyway to be fully regulated in the virtual asset model law. So we have an umbrella piece of law. And I think this is the first time in history in this ecosystem that you've seen that. You've had one piece of law that other laws, depending on the products and services that come out of the ecosystem, can now be built under. So it's a really good model. And many countries have taken the virtual asset model law. I think there's about 30, and there's about 10 more working on them at the moment in the Commonwealth. So that in itself shows that this was something that countries needed, and especially the small ones that don't have the resourcing. I mean, when we did this, you look at the UK, the Attorney General's office in the United Kingdom has at their disposal 1,000 King's Counsels, 1,000 lawyers, 7 days a week that they can call in to do stuff. They don't seem to do it very often, but they do. If you're living, you're the Attorney General in Malawi or the Dominican Republic, there's you and you only. So there's a disparity in the size of the countries and their level of wealth. So we give them a model. They don't have to rely on people coming in and paying a fortune for it, and they can just adapt it to the legal system that they have. And I think
this is the most funniest part is that there's a whole Commonwealth of Nations with the model law that you've written already. But yet the UK are still trying to come up with their own, and they don't want to reference something. Because I just saw the news today, and I just made a video on there. I'm like, what? Why are they reinventing the wheel when there's something there already?
So it's Australia, Canada, the UK. They think they're very good at what they do. Like, we're very regulated countries. They think that they can do it better. Well, that's good for them, and I hope they have come out with pieces of law that people like and can be usable, and user friendly. But we did it because Australia, Canada, and the UK don't make up the Commonwealth. the 2.6 other billion people, the 2.6 billion people that are in the Commonwealth don't come from those countries. So they don't come from, the first world countries that, people look at. And does that mean that they've got less, they're less better at this, or they have less legal systems that are good? No. I beg to differ now, because I think you'll see a complete shift over the next 10 years where there's populations like in Nigeria and India where half the populations are under the age of 30, they're going to be the dominant forces. It's not going to be the UK or Australia or Canada. They're going to play catch up. And the genie's out of the bag now. Look, good luck with now trying to come up with something that you think's new. You can't rehash old laws, and you can't fit round pegs into square holes. And that's what a lot of these first world countries, the Commonwealth, have tried to do. They've tried to fit digital assets and crypto into existing financial laws, and it does not work. And you can't tell me that every virtual asset is a financial product. They're not. Like an NFT on a crypto drug is not a financial product. Where are you going to put that? So it needs. I think if you look at what the standard set is saying, so you have same risk, it's similar risk, specialised regulation, because this ecosystem can't be fit into regulation that exists in the world, and then you get the same outcomes for financial stability. So I don't understand why there's so much pushback still from the bigger nations about just adopting one model, because it also helps the ecosystem. Because what do you want in the ecosystem? If you're a virtual asset service provider, you want legal clarity. You can't get that in the UK or in Australia or Canada. You might go to jail. Legal clarity is the most important thing. But if you can now passport your businesses, guess where everybody with technology companies, guess where all your clients are sitting? In the emerging world. Most of them are in the Commonwealth. So it makes sense for the ecosystem to look at these countries too that have got robust legal systems around virtual and digital assets now, and clear legal frameworks which give you clarity that make sure that you're not going to go to jail because you don't know what the law is going to change on you tomorrow.
Yeah, it's so ironic that the emerging markets will actually have much more clarity on these laws than the actual developed countries, right?
And the little
Because
guys. I mean, I'm
yeah,
so proud of the island states that I've worked in. They can't go and build and manufacture cars. What do? They Bermuda or Mauritius or even Jamaica. They need to find innovative ways to support their economies. And this is the perfect way to do it, because if you can drive people to your country or your jurisdiction where you have legal clarity, regulate them properly, people are happy to be regulated. Our ecosystem has been calling for regulation for the last 10 years. Maybe a couple haven't, that would prefer the in-between, but most of us are very happy to be regulated. I think that's and looking for places that has a decent system where you can be properly regulated and run your business and passport it out to another country that's got a similar law is going to be very important for all of us in the next 5 years. So that's where your customer base is in the emerging markets. It's not, Australia's 8 million people. Okay, most people under 30 probably have some access to digital assets, but they're still very speculative. So I understand from a UK and Australia, Canadian perspective that they see these assets as speculative. But in places where you don't have a bank account, which is most of the Commonwealth, or you're not financially included, these assets and the ability to transfer them peer-to-peer are incredibly important, and they will surpass any system that exists that doesn't work for them, like mobile
exactly.
payments.
Yeah. So I interviewed someone who was based in Hong Kong, moved over here, but now working on a very big crypto project, actually a stablecoins project in Africa. Okay, why he wanted to work on it was because no matter what you do, if you even send $1 to one African country to another, you have to go through SWIFT, right? So he is very passionate to actually get this going. That's why I wanted to rope him, Dave Shin, in to talk to you about this, because if yield stablecoins really becomes big, right, and then it becomes legitimate, and like you said, everyone is below 30, who's going to use the bank? That becomes the bank already, the wallet itself.
So I mean, it's interesting. I mean, if I get paid in stablecoins, it goes into my wallet. I can transfer it onto whatever exchange I need to, and I'm KYC'd. Yeah, I'm very happy for the tax man, everybody to see it. I transfer that over, and then I usually put it into my bank account. That process can take, I think, maximum it takes a minute to do. If I had to do it through the banking system, from get paid from one country into another country, my God, it can take anywhere from 5 days to 3 weeks. Why? Nobody can tell me. There might be 5 different intermediary banks involved, but stable coins don't close down on a Friday afternoon and reopen on a Monday. This whole traditional finance world has a weekend. Stable coins and crypto are 24/7, 365 days a year. So these markets accommodate everybody, and it's peer-to-peer. I can do a transaction with another person with no intermediary, whatever time of day I want to, 7 days a week. That's also the efficiency and the time efficiency and the cost efficiency of these things, and they're global. Yeah, CBDCs were never going to work, and I kept telling everybody this, but no one listened to me. I was like, because the CBDCs don't talk to each other. So you can have a CBDC in Nigeria and one in Singapore. How are they going to talk to each other? They're not interoperable. Global stable coins are interoperable. So they're for the masses and they're for everybody, regardless of institutions or peer-to-peer, but they just make sense. Blind Freddie can see this.
So when we say stable coins, it's not just US dollars, right? It's any currency.
No, and that's why I think we were really in the Commonwealth, we wanted to do it, because if the US dollar supremacy continues into US dollar stablecoins, then we've changed nothing in the world. A lot of these Commonwealth countries, the emerging markets, they rely on US dollars for trade and things. If that just gets transferred, we only use USDC and USDT, then nothing changes. So I think the US will come out with laws, and we've obviously gauged in the 100 days of the new administration that they're concentrating on the US first, second, third, and fourth. So we wanted to give the Commonwealth a chance to be able to keep their sovereignty, and anybody in the world issue a stable coin, not so necessarily it comes out of the US, because that won't be a great outcome for many countries in the Commonwealth who are emerging markets, who have a reliance on US dollars and usually have deficits in their central banks of US dollars, or often gold reserves. So, it makes sense to give them something that they can use, because once the US come out with law, they will, everyone will be expected to follow. MICA, I don't think has done itself justice. I think I've spoken to more companies that have left Europe than that are entering Europe, and I think that's just too overcomplicated. So there had to be something in the middle, and there had to be something that covered off all types of stablecoins, whether they be asset backed, whether they be the dollar currency denominated, they're algorithmic, all those things. But they need some robust regulations around them too. Things like reserves, liquidity reserves, the reserve ratios that they hold. They're just like deposit notes in some ways, I guess, that we've seen since 1940 in the US, but they're different. So I wouldn't call them just deposit notes. And I think there's one bill in the US that's trying to just regulate them like deposit notes, and will just keep the banks in the system. But this can't be something that the banks own, because it didn't come out of the banking world. And to be quite frank, virtual asset service providers should have as much opportunity to issue it, and other private money or organisations like PayPal should have exactly the same opportunities as the banks. Why do the banks get the advantage? They've got the advantage for the last 70 years, and how well have we done with that in the world? Not very.
Yeah. So I think there's a nuance that I want to also discuss, that I know a lot of African countries we're speaking already are leapfrogging, and at the same time, they are also listening to a group of people like yourselves, and there's a whole group that's actually doing this paper, right? So, and then we also talked about that these different countries are, in a sense, evolving when you're actually talking to them. So, for example, when you talk about stable coins, I know we were in some meetings. Do they fully understand what happens and the impact of implementing a stablecoins law in their country?
So that's why so I think I've invented for the first time in history explanation boxes, because I'm not a lawyer. So when we wrote the virtual asset model law, I thought, you go through sections about what virtual assets are and virtual asset service providers and all the lingo we use in the industry. Regulators and attorney generals don't understand that. So I thought it was quite logical that we put boxes under every section, explanation boxes, of the cyber risks and the actual implementation of these things and what we talk about, as opposed to put it 100 pages down in some annex that no one's ever going to read. So we've tried to make these laws that we've written, and they're just a model. As I said, they have to be implemented by each country in their own way, but they give them the understanding of what that implementation process looks like, and it's written in language that a lawyer can understand, a banker can understand, a technologist can understand. So for me, these are very practical model laws, are very practical because they can be, they can be maneuvered to fit into any jurisdiction, but they all, at the end of the day, each law has exactly the same, framework and consistency. So there's harmonisation and consistency across however many countries in the Commonwealth take it. That's very powerful because at the moment you've got such fragmented pieces of regulation and law, and the Europe are off doing something. We're not really sure at the moment what the US is going to come out with, although they're going to come out with something. The UK is still trying to figure something out. I don't know what Australia is doing. Canada, again, but the biggest use cases for things like stablecoins and cryptocurrencies are in the emerging market, and that's also South America, which is not Commonwealth, by the way. But I think there's many countries in South America like El Salvador and Argentina and Brazil that are doing what they need to do, and I think some of those laws are pretty good as well.
So, doing all this now for, I think you said 2018, so that's 7 or 8 years already. What is the biggest challenge right now? When even till now, I know it becomes like clockwork for you, cookie cutter style for you. But what is still the main challenge when actually getting this stuff done and talking or maybe is it communication? There's still a lot of challenges and so on.
It's the inertia of the system to change, and I'll be very frank on that. Most of the time when you're dealing with countries, you're dealing with bureaucrats, and people that don't understand the subject matter. Many of them don't want to learn. They're really not interested. It's a challenge. The education piece is the biggest challenge of all of this, because I'm one person. I can write a piece of law and help a country, but I have to leave. I mean, I can't sit in one spot forever and a day. Each country needs to stand on its own 2 feet and understand how best to supervise and how best to regulate. And so I really try that in the countries that I work with, to not write it for them, but give them a helping hand and leave them with a framework that they can embrace and adopt and run themselves. But the biggest problem in the beginning is the education piece, because there's still a huge gap in people, what they think a cryptocurrency is, what they think an exchange does, around hacks. Everybody's still got the same, issues and inertia and skepticism around cryptocurrencies they did 10 years ago. That still hasn't gone away, and I don't think it'll go away for a long time until it's completely integrated into the system. So that's my number one challenge is education and people not really willing to change. But with the global standard setting requirements for countries, doesn't matter how big or small you are, you have to comply. Or you face things like going on the FATF grey list, which is the standard setter for money laundering, terrorism financing. That's not a good place to be. I work with many countries that have gone there. It's easy to get there, but it's very hard to get out of it. So you don't, and you also don't want countries to have to do that, because it stops your corresponding banks. It inhibits how businesses operate, how banks can move money. Everything gets slowed down. So you need to give them sensible regulation, and I think sensible regulations and law that don't stifle the innovation, because that's also one of the biggest problems. I mean, if you look at Singapore and MICA, I think those frameworks are so comprehensive and so detailed, and they've gone beyond the point of anyone being able to innovate in their ecosystem. So I think that's problematic. You've got to have proportional regulation and laws to allowing innovation to not be stifled.
So just then we were saying some countries, when they go into the FATF grade list, So fed up grey list, basically, there's a lot of consequences, right? Because maybe there are other correspondent banks that don't want to really work with you, or when companies to onboard countries in the grey list, for example, a bank trying to onboard someone that lives in a grey list country, you may be considered high risk, and there's a lot of problems.
Oh,
So
yeah.
do the African countries, when they actually see this new piece of model law and they try to implement, aren't they worried that if they don't do it right, they may also get into the grey list?
Yeah, absolutely. Many African countries have been there not once, twice, probably three times. Most of the smaller jurisdictions have faced this way before crypto came into the equation. It just so happens that since 2019, a lot of the FATF recommendations now apply to virtual assets and people, virtual asset service providers. So it's not a case of, oh, we'll just look at this and wait. It's like they have to do something. So for me, and I looked at, the number of, as I said, the big consulting firms that go in that don't understand the ecosystem, that write these pieces of law which make no sense. They don't protect them from, AML provisions or consumer investor protection. They're just sort of a rehash of people's security laws, which doesn't work. So, and you'd, with the Commonwealth, there's so many of these smaller jurisdictions that have so many other problems, and a grey list just adds, tons and
Only a
tons
small
of
part.
weight. Yeah, but it adds so much onto them. So, you don't, first thing is you don't want countries to go on that list and be non-compliant. So as I said, again, we all did this pro bono. We continue to do it pro bono because it shows that we have no vested interest. And I think this is the problem you've seen in some jurisdictions where technologists have gone in and tried to write policy because they've got vested interests. That doesn't work either, because technologists are not policy writers, and often the policy writers are very, very new to the space. They don't understand it. So they'll listen to what they think's right. I think there's a lot of people that go around the world that shouldn't be going into countries from our space telling them how to implement things, because they don't really understand policy or financial stability. A lot of us that came from the traditional finance world, at least we understand things around systemic risk. I lived through the GFC. I'm not going to be the person that causes the next GFC, whereas some of these reckless technologists that run around to some of these these smaller jurisdictions and offer to give them advice for free, but that have got an agenda because they want to put in their product, that's not good either. So that's why we said if we give out a model that is generic and everybody can use, it takes that risk out of the system, because the last thing you want to do is have another FTX debacle in a small jurisdiction, because it ruins them.
Yeah. So jump back to the paper. You were saying that the paper that we did, we benchmarked against different laws that were out there. What do you think? So what is it that that you're seeing? This model law has things inside that are much better than the others, the other laws.
So I think our inclusion of things like yield-bearing stablecoins and allowing VASPs and tiered issuance of stablecoins by private institutions is very different from the other laws that I've seen. And also on our technical side, because if you look through like stablecoins are very, very technical, and they can they can be big problems with cyber security when you're implementing their systems, huge problems. So I think we got some of the best technologists in the world that have implemented stablecoins, and some of the best cybersecurity people in the space, and people that work for for presidents in cybersecurity. So I think and we've given like a laid out what you need to look for, like basically a 101 of cybersecurity, a 101 of standards and technical audits, things that other laws haven't included, but which are very important, because the last thing you need is these things to be registered in your company and they be run by a bunch of criminals, or there'd be a hack and you lose $1-2 million. Some of these, or there's a recent hack in Nigeria last week. I mean, I think that was in the hundreds of millions of dollars, which was just a Ponzi scheme. So you've got to make sure sure that you give them the right information and the right tools so that they feel comfortable enough to supervise this space and regulate it. Because regulators, how they regulate today, they do on-site inspections in an office. What are they going to be looking at a computer and a box? Then you say, oh yeah, well, we hold all our custody offline in cold storage. So they have to understand that, and explaining these concepts, I think, has been very important in the way we've written laws, because it is very new. And the attorney generals that generally write this law, or the finance ministries, they don't have the technical expertise. So I think we've taken a lot of time to put it in general public speak, not to make it really technical so they don't understand it. So I think ours is, our laws are very user friendly, and they're also written by a bunch of non-lawyers as well. We've got lawyers, but by those of us that are not lawyers that have come from business, I think we've been able to add in a way to communicate to how these things should be regulated and legislated, which is not too technical or too legal.
Interesting. So what's your view now after stablecoins, after yield-bearing stablecoins? What do you think will be next, or even further down the line?
So I think the stablecoins are having a moment, and I think the US have pushed that to the forefront, and there's 2 bills there at the moment. So I think this year was always going to be the stablecoins, because the last couple of years you've had Web3 explodes, and so the stablecoins do offer the ability on that transactional layer of moving value across open systems to exist. Private money will have to coexist with centrally bank issued money, and I think central banks have got to give up on the notion that that's not going to happen, because they're going to have to live in harmony. But they both need rules. Central banks have very vigorous rules. If you're going to be issuing a stablecoin as a private company, you're going to have to be under some sort of regulation, and you're going to have to be transparent, because I think that's the biggest problem we see at the moment, is the lack of transparency and the lack of trust. Still, people don't trust our ecosystem because of what happens. I will argue that FTX had nothing to do with Bitcoin. Sam Bankman-Fried could have been trading jelly bean futures and been better regulated. It had to do with the governance, the fit and proper management. All those things that companies should do was not being done. That had nothing to do with Bitcoin, but Bitcoin got the rap. So that's unfair as well. But I think the next thing that I'm starting to look at now is real-world tokenization, because I don't think everybody's been talking about, tokenizing real estate and this stuff for many, many years, but the technology hasn't been ready, to be quite frank. The protocols, the throughputs and the protocols have not been ready. I think you're seeing some incredible innovation come out of things like Solana and Tron and Polkadot, and I think the ecosystem is now ready to start to build that. But you need markets. Just because you digitalize an asset doesn't give you liquidity. Everybody forgets that. Liquidity is the key. You can digitalize anything, but you need buyers and sellers. That's not going to change just because it's tokenized. So that the fundamentals of how that work will always be an issue. But I think real-world tokenization will be the next thing that comes after stablecoins.
Amazing. Yeah, so many startups working on reward assets. I always think when we talk about that, how does the custody work on the actual reward assets? How do you fractionalize? We're not there, but we're getting there. Yeah.
Yeah. Well, I think give me 18 months. Yeah, because I think about the fractionalization and ownership and the custody of this stuff. I've done this a long time, and but they're things that people like you and I and people that have been in the space, for a very long time, we understand and we worry about. So we're not going to just go, oh, that doesn't make it important, just let us come and operate your jurisdiction. No, it is very important. It's custody of this stuff is the most important. It keeps me awake at night. If I died tomorrow, how does my 21-year-old get the custody of my Bitcoin? So things like that in practical terms, you've got to really think about. And I've thought about this stuff for a really long time. I have a journal next to my bed, and I wake up, in the middle of the night every night and think of something and write it down, because I know that I'll forget it by the morning, because it moves so quickly. But there's a lot of us that have been in this ecosystem for over a decade. We've got a pretty good handle on things, and we haven't changed. I think, Anthony, when we were all back in this, you probably could have counted in the hundreds the number of people that were in blockchain and Bitcoin between 2009 and 2012. We're all still around. Most of them are retired, mind you, and are buying Learjets and Swiss government bonds. But the OGs are still around, and I get really annoyed when I hear people attack people like Vitalik Buterin online. He at 18 was an 18-year-old guy that gave us smart contracts. Without Vitalik, the ecosystem wouldn't be where it is today. So we've got to stop. I think sometimes we're our worst enemy as well, because we attack each other, and that shows immaturity, and and I think that's still one of the biggest problems that we see with the crypto bro and that sort of that following of almost Jesus, like, of the disciples of Bitcoin, has got to get out of the system as well.
Yeah, we
People like
we need more of these documentaries out. I mean, I think Netflix is getting one out on Vitalik and his story, because I
yeah.
was at I think I said it in many of my episodes, that when I went to a conference and I was speaking there, I asked people if they know about Satoshi Nakamoto. So little hands up. It's unbelievable. So it will reach
And
a point that
they
people will forget Vitalik 20 years down the road.
they already starting. I mean, I dished somebody out on LinkedIn who blocked me the other day
Wow.
because he was taking crack at Vitalik, and I was like, "Look, who are you? When did you come into this space in 2020? You don't even know Vitalik Buterin." Yeah, without people like Vitalik and the guys that were behind Satoshi, they built us the future of money. Like they built. So these are the guys. Yeah, it's like, and my mentor is Bob Kahn, who built the internet. He wrote the transmission control protocol and the internet protocol. Nobody knows him. And to me, that's the saddest thing in the world, because he gave us the internet. Without him, the internet wouldn't exist. And I ask people in rooms, do they know who Robert Kahn is? And nobody puts their hand up. And he's 89 now. He's not long for this world. And he made no money out of the internet. So I'm very passionate that we have to give respect, and we have to give kudos to the people that built these systems that we're all using, because they just didn't come out of thin air. People built them. So
Totally.
and disrespecting them is still a big problem in our ecosystem, because the newbies, the people that have come in since 2018, they don't understand the struggles that we had back in those days as well. I mean, I remember going into countries and central banks just hoping and praying to God that the guys I walked into weren't going to get arrested. Those days were the Wild West, and we're going in and trying to explain this to the central bank governor of Canada or anywhere. I mean, they looked at me with daggers. We've come such a long way, but it's been a journey of perseverance and really believing that things like Bitcoin is the future money. And I really do believe that. And I believe in the whole ethos of why it's important that we can have peer-to-peer trading and democratization of money. Coming from the traditional finance system, I'm very versed to speak on it, because I can tell you exactly all the flaws that exist in the traditional finance system. And that's probably why they don't like me very much either. But, and we have to progress. But I think the industry itself needs to grow up, and it still needs to grow up. We're still bickering amongst ourselves far too much. We should be a mature ecosystem by now, because we've been around long enough. But we always get called out for the scams and the fraudsters, and that's really unfair, because there's just as many of them in traditional finance, I'll argue.
This is interesting, because we're reaching to the end of this part of the show, and that was the question I wanted to ask. So the last question was basically, what's the one piece of advice for the builders navigating all this regulation? What's your imparting message to them?
So keep building. Put your head down. Don't get involved in the froth and the arguments online about who's better than who. Just keep building, and make sure you've got a really good compliance team from day one that can help you, or you've got a mentor or someone like one of all of us OGs. Make sure you can reach out to somebody that can explain to you what you need to do to understand this. Because I understand the builders are technologists. What on earth do most technologists know about money laundering, terrorism, financing, and why should we? Because all of a sudden we have to. And 10 years ago, and you had told someone that was building a protocol that they really have to worry about the standard setters, and they go, "Who the hell's FATF? Like what?" So, but you have to be versed in this stuff now. If you're building in the ecosystem, you need to understand that you've got a responsibility, and and the standard setters are put there to stop people being harmed. Like consumer investor protection is there to stop people fraud, scamming people. Money laundering, terrorism financing, standard setters there, because none of us want people to get blown up or little girls to be, sex trafficked. All those things none of us want. So they actually do fulfill a very good role. And for financial stability, none of us can live in a world that's not financially stable. Although at the moment, I would say that we're on the brink of not being stable anywhere. But those are considerations that you have to consider as a builder, whether you like it or you don't. So don't put your head in the sand. Get yourself a good compliance officer and somebody that can navigate you through this legal system.
Thanks,
And look
Loretta.
for
This is exactly what I'm building Azentic for. Basically, teaching founders that day one, you need to think about compliance, because it's in a world that we have a huge fintech pie for everybody, but yet the licensing is also growing. So you need to think of that at the same time. You can't just grow a product. There's no such thing as just product in the fintech space.
No. And look at the jurisdictions that have good regulation and legal clarity. And there's a lot of them now. And look at them, because I think if the country that you're sitting in is not working for you, move. Because I think the time has come. If you're sitting somewhere that's stifling you and it's going to cost you a fortune to get regulated or licensed, move. Go somewhere that's got a decent framework, that's not going to, they're not going to tax you to the bejesus, and that you can build your innovation in a safety net.
Great. Thank you so much, Loretta. We've learned a lot today. We can see a lot of the updates we have on stablecoins that I wanted to talk about, and even I learned something in this show as well. So thanks for this. So what happens next is that I'll be creating a condensed video for everyone, because as we know, the attention span on our phones is not going to be that long. So here's a gold mine of all the content that I have, that I'll be condensing all the main nuggets for everyone to see. It should be out by basically before the start of next week. So thank you again, Loretta. For the ones in the US, thank you. For the ones in the US, have a great day. For the ones in Asia, have a great night. Thank you so much.
Right, yes.
Thank you.
Bye.
Bye. Let me end stream.